There was an article on Globe Street recently that provides updates on commercial real estate, and it said that Class B apartments are outperforming other commercial real estate assets. Now that sounds a little odd given all the stuff you heard about on news about apartment foreclosures, etc. So what's really going on? And what does that mean for you if you're looking to buy apartments or maybe to invest passively? So stay tuned, I'll break it down what's going on right now. My name is Michael Blank and I help people become financially free through real estate. Article basically says that apartments, Class B apartments specifically, Class B are the more affordable ones. Class A is luxury. Class C is very, very affordable, subsidized housing. So Class B is, built in the mid 80s, early 90s, that kind of stuff. So these are emerging as top performers in the commercial real estate in general, with a rent growth of 1.4% in 2023. And it's outshining both luxury Class A and more affordable properties, Class C, according to Apartments.com Q4 2023 multifamily rent report. Now, the significance of this is that this shift in demand, it's not really a shift, but this demand towards Class B units is really attributed to improved customer confidence, lower inflation rates, and the absence of a recession, which we all thought would happen in 2023, and it didn't. So the data indicates that Class B units remain highly sought after due to greater affordability, even as housing costs have risen significantly over the past decade. And this trend is expected to persist through this year. So the question really is, what does that actually mean? Like what's going on right now? So why is there demand for Class B housing, right? One of the reasons, main reasons, is continued housing shortage in America. We're short about 3.2 million homes. Some estimates are even higher than that. And even though there's a lot of luxury apartments and Class A coming on board in 2024, it really affects more the luxury side, not the more affordable Class B. So there's a huge, you see this giant gap here. Even from 2010, there is more demand for housing than there actually is housing. And that's been the case for years. And because of the rise in construction, this is not about to change. So the continued housing shortage, and also renting is now much more affordable than buying. I mean, look at this graph here. It's been like that for a good while, but look at the record here in the last 3 years. It is substantially cheaper to rent than buy. And this is why homeownership is at a record low as well. Now look at this other graph here, right? This shows the permits that are pulled for apartment building units. And you can see this giant drop off at the end of 2023. Now, why is this happening? Well, apparently it's happening because developers don't think they can make money building stuff anymore. It's inflation, costs are too expensive, regulation. So you can look at this graph here and there's a giant drop off, record low really in permits, which means that while there may be units coming on in 2024 from stuff that was started 3 or 4 years ago, what about 2025, 26, 27? Like where's the pipeline, right? And the answer is there is none. And this is why there's continued demand for Class B housing. So what does this mean for you, the multifamily investor? What does it mean for you who wants to passively invest? The fundamentals for Class B multifamily are strong. In fact, currently, according to this article and other data, it's actually the strongest in the entire universe of commercial real estate. But here's the thing, right? There's stuff in the news, foreclosures and things that are happening and debt coming due. So prices are down, right? Their prices are down because the Fed raised interest rates so quickly, 11 times in a row. And so prices are down. I would say, while I can never time the market, okay? I would say we're towards the bottom of the market. I can't quite tell whether it's gonna go a little lower. I think it will, but we're towards the bottom of the market, right? So you have an asset class that has fundamentals, that are strong fundamentals, and prices are down. What does that mean? It means buying opportunity, right? So this is exactly when Warren Buffett buys. He buys fundamentally strong companies that are temporarily undervalued, and that's when he gets in. And so now is the time to buy for the smart and discerning investors. So what can you do from this? Okay, number one is I would say stay informed. I would study these news and don't look at CNN and Fox News and all that crap. Follow Globe Street. It's a great publication. Marcus Millichap puts out great stuff. So stay informed because it'll tell you really what's going on right now. And then pay attention to the fundamentals. Don't pay attention to the news. Look at the fundamentals. Look at the data. Look at the demographics moving, for example, in the Sun Belt, right, where the demand is stronger. And don't just look at the headlines that says, oh, rents are flat or down in Austin. And okay, look at the actual drivers. Look at the rent growth over the past 3 years, for example, and look at demographic growth in some of these areas, right? What is the fundamentals going to look like in these areas, right? Is it possible that maybe there's a pause because we run up so quickly? That's what I think. So look at the fundamentals and then really look for opportunities to buy and or to invest. So if you want to start buying apartment buildings yourself with your own money, or you want to raise it from others, if you're the active entrepreneur in that, then my tip to you is to get your education now. Okay, get your education now, because here's the thing. You want to be talking to brokers. These deals are going to happen in the off-market space, and we already see it happening. They're never going to see the light of day. They're happening behind quiet, closed doors, where brokers are reaching out to their best operator, or even operators reaching out to other operators doing side deals. So you want to be talking to the brokers. And if before you do that, you want to get your education and you want to build your team and start talking to brokers. Otherwise, you're going to miss this opportunity. Now, if you're a passive investor and you want to get into this passively, like, man, I've been burned. Like, I invested in one of these things and man, it didn't go so well for me. If that was you, okay, don't throw the baby out with the bathwater. I want you to recognize what it is. It is a momentary blip in time where multifamily is being stressed right now. There's no question it's being stressed right now. But again, stay informed, look at the fundamentals, and look for buying opportunities. Because of this distress, we're going to be able to buy stuff for pennies on the dollars because of that. So my advice to you is, if you've already invested with an operator, okay, reach out to that operator and reconnect with them. Find out what's going on, right? Really understand what's going on and understand that there are good operators and bad operators, and the market affects everybody. So a bad market affects good and bad operators. Try to figure out which one your operator is. Now, if you have any more questions about capital calls or passive investing in general, or just want any kind of update on investments in real estate, then let's hop on a call and let's have a chat. It's important that you stay informed and ready for what 2024 has in store. Connect with us at nighthawkequity.com/call. You can book a call with us. We'd love to have a conversation around some upcoming opportunities in the real estate space. Catch you next time.